What if I told you that adding more strategies to your portfolio doesn't just increase your profit, it actually reduces your risk? Most traders focus on finding the perfect single strategy, but the real power comes from combining multiple strategies the right way. Hi traders, I'm Elisa, an algorithmic trader, and in this video I'll start with just one strategy and show you its performance. Then I'll slowly add more and more, up to 20 strategies, so you can see firsthand how profits stack while drawdowns stay low. If you're serious about building a stable long-term trading system, this is something you can't afford to ignore. I've got here my strategy pool, which is a collection of currently 20 different strategies. They were built using the Express Generator workflow version 2.0, which I recently updated, and today we're going to look at the portfolio step. They were created using a tool called Express Generator and a combination of Expert Advisor Studio, but that is not the tool I'm going to show you today. This is the tool. It is totally free. It is called Quant Analyzer 4. I do have the paid version, but here I'm going to show you the free version to see how you can build a portfolio, and it accepts a whole bunch of different inputs. You can see that it accepts MetaTrader 4, MetaTrader 5, my FX book, FX Blue links, all that can be fed into this portfolio. Today, I'm going to use CSV files to feed into this tool. To start off, I'm going to load my CSV files. So I click on Load Report, and I'm going to select all 20 CSV files and press OK. Once they're loaded, under the Simple Strategies tab at the bottom, you can see they're all listed. You can see I've got multiple currency pairs, I've got gold, I've got different time frames, I've got 30-minute time frame, 1 hour, 4-hour time frame, just a general mishmash of different strategies. And if I click on any one of them at random, you'll see it pops up under the Analyze tab, and it's got some really good stats here that I like, that I find missing in other reporting tools. You've got the maximum consecutive wins, maximum consecutive losses, the return or drawdown, which is automatically calculated for you, the winning percentage, the average win, and the average loss. And the thing with this particular strategy is that it does not trade that often. You can see there are many months down below that have 0 trades. So if you were trading this strategy on its own, you might get a little bit impatient. And if I pick the next strategy in the list in alphabetical order, you can see every year it doesn't always make profits. This one we are seeing 3-4 years where the strategy is losing. So let's build a portfolio. We'll start off with the first one, and noting the profits is $2,865 and the drawdown is $427. Next, I'm going to add the next strategy in the list, and I'm just going to do this in alphabetical order to make it easy for me to track. And I'm just going to select 2 and select Create a Portfolio, which you see in the Portfolio tab. Now, if I select it, you can see the profits has increased to $5,601, but the drawdown is still relatively low at $497. And the equity chart is starting to look a little bit smoother. The dark blue line is the portfolio, and the bottom 2 lines, the red and the green, is the individual strategies themselves. Let's delete this portfolio and go and create one using 3 strategies. Create portfolio. Now we are starting to see much smoother equity line in the dark blue in the portfolio line up the top. And now you can see this third strategy, which is the Aussie Japanese yen, makes a significantly more amount of profit than the bottom 2. Now our profits has increased and jumped all the way up to $15,000, but our drawdown is still only at $932. This is 4 strategies. Now we are at 5 strategies. I wanted to pause here because now if I look at the overall portfolio, including 5 strategies, notice the drawdown. At 3 and 4 strategies, the drawdown was at about $900. Now at 5 strategies, our drawdown has actually reduced up to $879 now. We are starting now to see the benefit of a portfolio. Our drawdown is actually reducing while our profit is actually increasing. 6 strategies. Unfortunately, now our drawdown has increased to $1,287, but our profits is still increasing exponentially. Remember, I am just building this from alphabetical order. This is not the best way to build a portfolio. The point I want to emphasize here is just how the drawdowns and profits are impacted by adding more and more strategies. So now we are at 7 strategies, and this is the equity chart with 7 strategies. 8 strategies, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Before we go on, let me tell you about the sponsor of today's video, Trading.com. So they are not a prop firm, but a way to get hedge fund capital and get paid along the way. So if you're familiar with the prop firm industry, usually they have like a million rules designed to make you fail. But since Trading.com is not a prop firm, they don't have silly rules like trailing drawdowns, daily drawdowns, time limits, rules on your trading style. They just have 2 rules. Don't hit the maximum loss of 10%, and you get moved up to the next stage when you hit the 20% profit target. Then there's 3 different account types you can choose from. Let's pretend you go with the $1,000 option. Then there's 5 stages. You start at stage 1, and then when you make 20% profit target, you receive 1.6K in payouts and move up to stage 2. Every time you make it to the next stage, you get more money and more payouts. And the last payout is 20K, where you're eligible to get hedge fund capital. And if you're interested to start your own journey in managing real money in a real trading account and get paid for it, then the link to sign up to Trading.com is below. I am personally building up this portfolio to eventually trade on a Trading.com challenge instead of using commercial robots. And thank you for Trading.com for sponsoring this video. At 20 strategies, the portfolio now is making $165,000 in profit with only a $4,000 drawdown. And the overall portfolio chart is looking pretty good. However, it's starting to look really hard to see what the individual equity curves are. So I'm going to switch views to sub-equities only, and you can see they're fairly jagged, all the different equity curves. Some of them have long periods of drawdown, but that's okay. When you add them all up together, you can see a pretty good equity curve. Let's put all that into an Excel spreadsheet so we can see the trends. The columns here are the number of strategies, the profit, the drawdown, and lastly the return on drawdown, where the formula for that is profits divided by drawdown. And you see the worst performing one is the number 1, where you only have 1 strategy, which made just over $2,000 in profit with a $427 drawdown, which gives you a return on drawdown, which is a risk-adjusted return ratio of 6.7. And the best one is at the bottom, where you have 20 strategies and the risk-adjusted return is 40 times. And now let's chart it so we can see visually what's going on. On the left here, I've got return on drawdown, and at the bottom, you've got the number of strategies. So remember that I did build this randomly in alphabetical order, which is not the actual way to do things, but the purpose of this video is just to show you that the more strategies you have in a portfolio, the better the return on drawdown. So here, again, you can see we're starting off pretty bad. In the middle here, it was not that great because we can see as we are adding more and more strategies, the return on drawdown is actually getting worse because I didn't build it the right way. But towards the end, when we've got 20 strategies, you can see we have a fantastic return on drawdown of 40. You might be saying to yourself, okay, great, the portfolio equity chart is great, but I want to see the actual strategy logic. I want to know the strategy entries and the strategy exits. And honestly, I don't know. For me personally, I don't concentrate on what the exact entries and exits are. I can find out using EA Studio, but that's not what's important. Using Quant Analyzer, I know the EA stats. I know how many consecutive wins there are, the average trade, the winning percentage, but most important of all, I concentrate on the process of how it's built, the system behind the scenes on how it was built to address the risk of curve fitting. And even more important, And all that is my process for self-improvement. That's where I actually spend all my time. What actually works in live trading, not back-tested data. If I tweak these settings, does it improve the overall probability of success? If you want to hear more about my process of always improving my own systems, then watch this video right here. Thanks for watching. Bye.